Goldman Sachs is now serving not only the rich, but has targeted service to everyone. Now, Goldman Sachs aspires to become like other normal banks by entering an uncharted business vertical of retail banking. What is perpetrating this change? And how has the company fared in its efforts? All right, we hear you. And that's why we have come up with this video today. Make sure to watch till the end to know all about this big leap of a movement indeed. Also, if you have any doubts or want us to cover similar topics, then do let us know in the comment section. As we all know, Goldman Sachs is one of the most popular names on Wall Street. Goldman Sachs, which marked its 151st anniversary in 2021, and had always been known on the street as a legacy investment bank with main business lines of investment banking and trading. The legacy of Goldman Sachs extends back to centuries. This Wall Street investment bank has a storied history. Founded by Marcus Goldman 150 years ago, his son Henry revolutionized the industry with company valuations and IPO. It was the gold standard in investment banking for decades, and partners got rich when the company went public. But the firm's reputation took a beating during the financial crisis, eventually leading to one of the most interesting pivots in Wall Street history. Goldman Sachs was established in 1869 by Marcus Goldman, a Bavarian school teacher who emigrated to the United States in 1848. Goldman's son-in-law, Samuel Sachs, joined the company in 1882. In 1885, the business expanded into a partnership when Goldman's son, Henry, and son-in-law, Ludwig Dreyfus, joined the company. Goldman Sachs became one of the first firms to offer commercial paper financing to entrepreneurs. The company joined the New York Stock Exchange in 1896. In 2 years' time, the company grew rapidly and increased its capital to $1.6 million. The company issued the first IPO in 1906 when it took Sears, Roebuck and Company public. Goldman also helped F.W. Woolworth and Continental can go public through an IPO. Over the years, Goldman Sachs established itself as a market leader in the financial industry through acquisitions and expansions. The company launched Goldman Sachs Trading Corp. in 1928 as a closed-end fund, but it failed in the following year during the stock market crash of 1929. In 1970, Goldman Sachs established its first international office in London, the United Kingdom. It also created the private wealth and fixed income division in 1972 to expand its UK reach. In 1981, it acquired commodities trading firm J. Aron & Company, which dealt in precious metals, coffee, and foreign exchange. The acquisition helped Goldman Sachs tap into the South American market, which helped spur growth in later years. In 1986, it created Goldman Sachs Asset Management, a company that manages its mutual and hedge funds today. Now, to the main question, why the diversification? What is the need for diversification like catering to everyone? Goldman had thrived on the prowess of its trading division to shore up both its revenues as well as net income. At its peak, the trading division constituted almost 75% of the total company revenues. However, the trading revenues started witnessing a decline since the financial crash of 2009, from reasons including but not limited to more regulations, declining investor appetite for taking risky bets, falling commodity prices, and the inherently volatile nature of trading itself. Yet another issue Goldman faced was the size of its balance sheet, which was lower compared to peers such as J.P. Morgan and Citibank, since it was not taking retail deposits. This hampered Goldman's ability to underwrite bigger IPO and bond issuances, since there was lower capital they had to support their investment banking activities. Goldman saw an opportunity in the consumer banking space, which was largely untapped by legacy banks. Based on their team's interactions with consumers, they unearthed that the common problems people faced in their everyday banking were complex jargon, hidden fees, and policies and products that were inflexible given their needs. Goldman decided to solve these issues with a digital-first approach by introducing a neobank named Marcus. The name Marcus comes directly from one of the founders of Goldman Sachs, Marcus Goldman. The company hired Mr. Hart Talwar, an IIM Ahmedabad alumnus, who had previous experience working in the consumer franchise of Citibank and Discover Financial Services, to lead Marcus. How did Marcus carve out a niche for Goldman Sachs as a neobank? Marcus started out offering an attractive savings bank account, high-yield certificate of deposits, and no-fee personal loans. By offering above-market interest rates, that is 2.05%, which was 4 times the national average, and it wanted to lure customers away from banks giving meager rates on deposits. Initially, the target audience was the young millennial population who are technologically savvy and do not shy away from adopting new-age neobanks as an alternative to traditional branch-driven banks. Marcus aspired to offer its customers personal loans to help them pay off their credit card debt, since the APY, annual percentage yields, i.e., charges or interest on those, were far higher than any debt in the market. They'd marketed the product as a tool for debt consolidation, wherein one could take a lower interest rate from Marcus to pay off all their other higher-rate outstanding loans. The biggest differentiator for Marcus was that the product was at the intersection of the offerings by legacy commercial banks and new-age neobanks. Neobanks could make a space for themselves by offering a superior user interface, fluid payment options, and round-the-clock customer service. However, these startups lacked the balance sheet strength to make the loans themselves, and hence had to partner with traditional banks to make the loan. Conversely, while the legacy banks had a strong deposit base to provide loans to people, they were often marred by cumbersome processes, outdated technology, and poor customer service. In its attempt to disrupt this space, Goldman was able to leverage its technological prowess to adopt a branchless retail banking network, which allowed them to save a lot of money on overheads, since running all the physical branches required huge operational expenses. Simultaneously, Goldman also had the balance sheet strength to make the loans independently, thereby having control over the entire customer lifecycle. To add to this, Marcus Bank was able to benefit from the Goldman Sachs brand name immensely. It was able to thwart competition from many fintech firms, which were still relatively unknown and had to spend on marketing to acquire customers. Now let's take a look at its expansion to newer products and geographies. Having successfully launched Marcus in the USA, Goldman expanded its reach to the UK in 2018 again by offering higher interest rates and obtaining 100,000 customers in just a month. By June 2020, that number shot up to 500,000, at which point Marcus actually had to restrict new customers from opening accounts since the deposits would have breached regulatory limits. As we can see, Marcus has shown tremendous growth on all fronts. In August 2019, Goldman collaborated with Apple to roll out a revolutionary new offering, a titanium-made credit card called Apple Card. It was a huge success with customers owing to great features like no fees, daily cashback of 2%, and enhanced security and privacy features. This gave Goldman access to over 100 million iPhone users, enabling it to provide subprime loans to consumers through a robust tool for tracking each person's spending habits and appetite for taking loans. Marcus now aims to expand into newer features, such as wealth management for the masses through Marcus Invest, a robo-advisory platform that allows consumers to open an account with a minimum balance of $1,000 and an annual maintenance fee of 0.35%. The platform will check the risk tolerance and the investment horizon of its users and recommend customizable strategies to them. In an effort to accelerate the growth of its consumer business, Goldman purchased Green Sky, a fintech platform that provides home improvement loans, last September 2021 in a $2.2 billion deal. It is also investing in the launch of a Marcus checking account later this year. The bank is also trying to make its core trading and investment banking revenues more durable. In trading, it is doing more business with the top 100 institutional clients globally. That has helped it pick up market share, which executives are confident it will hold on to. In investment banking, Goldman has added to its additional strength in advising blue-chip companies on deals by taking a bigger market share, advising mid-market companies. The bank has also grown its asset management and wealth management businesses. Those initiatives justify the bank raising its medium-term ROTE target despite trading and investment banking activity slowing, people within the bank say. Goldman Sachs launched its Marcus unit in 2016 and has since built the consumer banking arm into a multi-billion business. Marcus, which is behind the popular Apple Card, has been gearing up to add checking services. Solomon predicts revenue of $4 billion by the end of 2024, up from about $1.5 billion currently. Goldman's investment banking revenues soared to new heights during the pandemic amid a larger deal-making boom that has led to increased hiring and bonuses. Goldman Sachs has always been at the forefront of innovation and deserves credit for successfully implementing this strategy. Over the next 5 years, Goldman aims to amass over $125 billion in consumer deposits and have a $20 billion plus loan book. Lastly, we would like to leave you with a snapshot that shows how the Goldman franchise has expanded its product offerings over the last few years, cementing its position as a market leader in banking. Now with that, we end the video here. What's your perspective on the upcoming developments in the company with its strategic decision of now not just focusing on the rich, but everyone? What do you think? Do let us know in the comments below. Also tell us what topics you want us to cover next. If you found this video infotaining, a like would be appreciated, and if you haven't subscribed, subscribe to the channel and leave the bell icon on to be notified every time so that you don't miss out on the latest updates.